fun. Um, so fun story. I had an underwriter lined up to do this for me who backed out due to nervousness. And then I had a second one scheduled to do it with me. And then he had a well issue. So he's actually going to be on next week's live. So that's my awesome friend, Tom Kraft. I'm going to put you on the spot because we're going to get lots of your peeps to tune in. So I do have a phone a friend. Right. So I have one of my underwriters who said I could text them and ask them questions throughout this live. And I've already messaged them about the H-1B visa. And I can answer your questions. I've been doing mortgages, guys, for 19 years now. I definitely know the answers to these. And we will have an underwriter next week, come hell or high water. So anyway, sorry about that. But thank you guys for tuning in. Looks like we have 20 people watching now. It'd be awesome if you let me know where you were tuning in from and what stage of the mortgage process you're in, so that way I know, how to tailor my updates. Okay, so love it. Oh, Rod. Hey, Rod. Thanks for joining us. Love that you're here. I've always wanted to visit Michigan, so maybe one day we'll connect. Nayeli Rivera, nice to see you, honey. Jen, Dayrun, Anusha, Miss Taylor, welcome, guys. All right, so I always kick off these lives with just a little bit of an update on what's going on with interest rates. So last week was really great news for the economy, great job reports, great job creations, lower unemployment. And so those are signs that the economy is recovering. So obviously we have felt it this week in mortgage-backed securities. And so we've had a couple of days of, reprices for the worst. Now, usually when we have a couple of days of reprices, they're usually followed by a small correction. We actually had a 10-year auction of mortgage-backed securities. So, this is way too technical. Anyway, there was an auction in mortgage-backed securities, and they were rated very favorably, and a lot of actual investors purchased them today. And so it's showing us that, not just the federal government is interested in buying mortgage-backed securities, which is a really good sign for rates. So we saw a little bit of a correction today. So if it's my, best expert opinion is that interest rates are going up as the economy continues to improve. If we see any kind of decline, especially due to the Delta variant, or we see that inflation is getting out of hand again, we will see some pullbacks. But if it's moving on this train, this trajectory, we will see interest rates slowly increase. So there is that. Alrighty. So hey, Darren, nice to see you. Miguel, Arnold, Brittany, very cool. Oh, congratulations. I'm super pumped for you on the USDA app. All right. So let's get to answering some of these questions. So Anusha, and this is for anybody who is trying to qualify with a visa. Not all visas will qualify for a home loan, right? An HB1 visa, how I understand it is that it's a specialty visa for your employer. So that means that they've contracted you. They've said that you have a special talent and they've hired you with those special talents, and you've had a continuance of employment. Typically they're, renewable annually or several years. If you have a history of working for a company, American Express is, well known for this, and we show that you have continuance and that they've renewed it, you can absolutely qualify with this type of visa. Now, you can also qualify with an employment verification card, and you can also qualify with DACA status, right? Those are all qualifiable visas and work permits. The one that doesn't qualify you, though, is the educational one, and that's where you're here just for, higher education. Once that expires, you either have to get a different type of visa or you have to return back to your regular country. So unfortunately, you wouldn't be able to qualify under those pretenses. So there is that. Hopefully that answers your question. All right. Nayeli, let's see. I have a question about how much escrow I really have. I'm closing in about 3.5 weeks. So escrow has a lot of names in mortgages and real estate. So escrow can mean the amount of money that you're impounding for taxes and insurance. It can also mean the time frame for your close of escrow, right? Or it can mean the company that holds your title and is holding your good faith deposit. So I think what you mean is time frame. So typically a home loan is closed in 30 days. Some lenders are taking 45 days, 60 days, some 9 weeks. It depends on really who you're going with your home loan, but most loans can get done in 30 days or less. All right, so Boston, Massachusetts, Florida, Tampa, my goodness, Clearwater. Where is Clearwater, out of curiosity? I've only ever lived in Arizona and from Nogales, so there's that. Let's see here. Okay. So I got some questions online, one particularly that I wanted to answer today. So I get these questions all the time where people send in their fee sheets to me and they want to know if they're getting ripped off or not. And this particular one was from a well-known broker. And one thing that I will mention to you is that broker fee estimates really are a lot different than what you would get from a mortgage bank or an actual bank like Bank of America. So just so that you guys know, typically they show a charge for whatever they're going to make on the loan, and then they show a credit. So they typically offset each other. In this case, it showed like a $4,000 discount point, and then they had a $4,000 lender credit. And sometimes those things can be really, really confusing when you're trying to decipher who's giving you the best deal or not. So when you are reading your loan estimate or your closing disclosure statement, Section A is all of the lender fees. Section B is title fees, and Section C are all of the impounds for property taxes and insurance. All of those add together, and so you just want to pay attention because the form itself, it shows you how to read it. But if you're just looking at that one section, you will miss like lender credits or seller credits, or you'll miss earnest deposits. And those are the types of things that really confuse clients. I decided I'm probably going to do like a video about this very thing and kind of compare like a broker fee estimate to a banker fee estimate, and then just really break them down so you guys can understand, like, if you were shopping between a broker and a lender, what the big differences are. So, ooh, Abner's here from Jersey. So lots of people like straight up on the east coast of town or the country. So very cool. Okay, so Carol asks, have I ever heard of a family opportunity mortgage? It allows you to purchase a home for a child with a disability. Do you know anything about this? So yes, I am very familiar with the Family Opportunity Act. It is for disabled children or for elderly parents that no longer work. It's a wonderful loan program for somebody who is trying to purchase a property for a family member that doesn't necessarily need them to live with them. It is not for like kiddie condos. So for children that are going to school that are not employed, that is a big distinction I want to make. Somebody tried to apply for that this week. That used to be something. So now if you want to apply with a child that can work or is just going through school, they have to be on the home loan with you. But yes, very familiar with that. Is there a question that I can answer about that loan program for you? Let me know. Okay. And if not, I'm just going to go directly in to the questions that people have sent me in. Can the child be a minor? You know what? That's a really good question. Let me message my underwriter. Yeah, minor. Opportunity. This is how fast I text, guys. All right. Still laughing 2 weeks after our hoe for $1. You know, guys, it's lasted like, I don't know, multiple decades of being funny. I have 4 siblings who also got to experience this same thing. So, too funny. All right. So let's see here. Okay. So why do people say that underwriting determines the fate of your home loan? So here's the thing. So a lot of loan officers vary in experience and vary in detail. So you can get a loan officer who has a really great conversation with you. Maybe they didn't verify all of your documents, or maybe they don't know how to validate all of your documents. And when your loan gets submitted to underwriting, their job is to meet all the quality control standards of Fannie, Freddie, or Ginnie Mae, which is like FHA or VA. And so if the loan officer has missed something, right, and the underwriter, it's their job to catch it, I mean, it can mean make or break for your loan, so an approval or a denial. And so that's why a lot of times people fear underwriting, because they hear the horror stories of being pre-approved. They find a house that they love, and then they find out that they later can't qualify. So that's what that means. Let's see here. Let's see what Patrick said. He said he's looking it up. No one has ever asked him that question before. I'm going to tell you, I don't believe so. So I'm going to say my gut answer to whether or not they can be a minor child is probably not. You typically have to prove that they are unable to work. And I imagine that's with a Social Security disability letter. And somebody has to take care of that minor child. So I'm not sure, but he's going to look that up. But I will let you know once he lets me know. Okay. What does it mean when your file gets sent up to underwriting? So every loan goes through a series of processes throughout the loan process. So the first step is, we prepare the loan disclosures, which is, what sets your loan amount, the interest rate, the monthly payment, and then we gather all the updated financial documents from you. So it's like paycheck stubs, bank statements, verification of homeowner's insurance, that your earnest money went out. Like those are the basic ones. Once we have all of those documents up to date, we submit it to a different department, which is called underwriting. And so that's what that means. But basically, like I said, they're quality control to make sure that your loan can be insured by any one of the agencies. And they will give us back anything that we've missed. So condition is typically an item that they need to complete their review so that they can put together a full package that will be insured by the agencies. And that's basically what underwriting is. All right, so let's see. So I'm in the process of purchasing a home, primary residence in Puerto Rico, along with a 10% deposit. My plan is to stay in the house for a few years as I keep saving to come back to the States, specifically Florida, and buy a house here. Would I be able to, say, in 3 years, apply for another loan as my primary residence? Hope this is not off topic as I join the live. Actually, this is a really, really great question. So people ask me this all the time. So you can buy a primary residence, and the only requirement that you sign at that closing is that you plan to live in the property for a minimum 12 months. And it's not like a guarantee that you're going to live there for 12 months, but that the intention when you closed was to live there for 12 months. And so let's say you get married or your job relocates you, you can again buy another primary residence in under 12 months, but you're not obligated to be in that home for like any more time other than the 12 months as your primary residence. So yes, in your case, if your plan is to be there for 3 years, absolutely, you can buy another primary residence. You don't have to refinance that property that you previously purchased. And lots of people ask this question, so awesome job for asking it. Tammy, you guys, Tammy is a local real estate agent in the Phoenix area. She is amazing. We work with her all the time. If you guys need real estate needs, hit her up, but she's giving us a huge shout out. We had a really interesting client with lots of moving parts. He was purchasing a new build property. We ended up being the secondary lender in that case because the first one had some trouble getting it done. We ended up doing a credit rescore. We ended up selling some equipment for additional down payment funds. And it had a ton of moving parts. And let me tell you, this gal, she kept that entire transaction together and she makes all the difference, right, working with the right agent. So if you're in Phoenix, definitely think of hitting her up. Okay, so Miguel asks, is there any benefit to performing the majority of underwriting process early in the application process? I.e. Movement Mortgage does this. So I do this on every client. So absolutely. Have you ever been asked for like a million things under stress, right? It's like no fun, right? You can't find it. You'll feel like you're not being approved. As it is, getting a home, the home loan process is the second most stressful short-term event in a person's life. And so, it's really bonkers, and you definitely want to be super prepared. Also, there's a lot of costs that go into buying. We're talking about your earnest money, inspection money, appraisal money, and you don't want to spend unnecessary money if you don't qualify, right? And all of this unnecessary stress can be done way earlier on in the process. Okay, so Carol is asking some additional questions. She says, I have 2 minor children who are severely disabled. We own a house, but we do not think we can afford a lateral move in this market. Do you think the market will shift? We need a larger home. So I do think that the market is currently shifting. And when I say that, guys, I don't mean that the market is crashing. I actually looked at the Cromford report today, which is a local market statistics that we have here in Phoenix. And one of the things that I did notice is that home prices, they're still increasing, but they're not increasing at the same rate that we saw last year. So last year we saw increases in the double digits. I think it was around 13%. This time we're only seeing about 4%. And if you're looking at like month over month, right? We had, like a 12-month rolling average last month was about 36%. We're about 30% now, in appreciation from last year. So we're seeing that it's like steadying out, right? Now that doesn't mean bottoming out. It doesn't mean lowering. It just means that it's not going to continue to increase at the same pace that it has been increasing. So I hope that helps. One other thing that you might consider is that, let's say you have to purchase a larger property, you can actually use the Social Security and disability benefits that you get to help you, as part of your income. And then also sometimes the state awards additional income as being a caretaker. You can also use that income as well to help you qualify. So I hope that helps you qualify for more. Okay. So Daniel said, I closed on my new house today. Do I think 2.25% interest rate on an FHA deal is a good deal? Guys, it's on rates because the market is changing all the time and everybody's situation is different. But I will say that if you're in the 2% for any type of loan, it is a great loan. Okay, so Rajani is asking, how long does it normally take to underwrite a new build loan? Unfortunately, new builds get underwritten multiple times throughout the process. Typically, a builder will want us to have a loan approval within under 60 days of their initial contract. And that's just because a lot goes into, framing the house and getting it built. And so they don't want to continue building a property that isn't going to, because they're customized to the client. So they don't want to build a property that's customized for a client that won't qualify. So you get underwritten a couple of different times, but your initial approval should be within 60 days of your initial contract. Okay, so Racimi Palacio says, that's exactly what happened to me. I was approved and it's supposed to close on the 15th, and then the underwriter didn't approve it. Guys, I hate these scenarios. They're really upsetting for everyone involved, right? And, I don't know how far along you went in the pre-approval process or if you provided all of your financial documents or what specifically happened. I remember last week it was like a debt to income ratio issue. But this is why I always recommend going with somebody with a lot of experience that wants to do that initial work up front. I know it seems like a hassle and not everyone does it, but this is a very painful situation to be in. There's loss of money, not to mention just the loss of expectations of being able to move into a property you really wanted to live in. So interest rates on reverse mortgages. Carlos, I don't do a reverse mortgage. Okay. And then also, Carol, unfortunately, my underwriter did get back to me and it said disabled adult child. So I think they have to be at least 18 years old. But a reverse mortgage, guys, it's basically like a mortgage to you. So you get payments on them that I imagine, since they're supported by the government, they should be similar to FHA loans. But if you really need somebody to help you with that, I can give you a recommendation if you go ahead and email me. Okay, so let's see here. Okay, perfect. All right, so I'm going to go to the next question here. You guys keep asking your questions. I get questions emailed to me, and then we use the sound bites to go ahead and email to other people on different places. So if you ever can't make a live and you guys want to email me questions, you can send them to my Instagram account or just straight up email them to Jen. Oh, hey, Ayeli. Nice to see you watching from California. Love it. Okay, so let's see here. Oh, and apparently we're also going to be putting these back on the Smart Sense podcast. That was a brilliant idea that I got from one of the viewers, and apparently my husband had been telling me about it for years. Okay, so who makes up mortgage guidelines? So this is a really great question. So mortgage guidelines are made up by the different agencies. So one is owned by the government, and that is Urban Housing and Development. So they come up with all of the affordable lending guidelines for FHA loans. The VA comes up with the benefits for VA loans, and then Fannie and Freddie come up with their guidance. Now, I will say that Fannie and Freddie are currently under a conservatorship, so a lot of the guidelines that they want to put forth have to be approved by our federal government. So, and so it's basically the agencies, but not without federal approval. So there is that. So there's a lot of legislation that's going to be happening probably this year and into next year regarding affordable housing. A lot of people are talking about this massive foreclosures and massive bottoming out of a housing bubble. But, the real crisis on the horizon actually is the lack of housing and the lack of affordable housing, and the fact that if prices continue to go up, which, all of the data is pointing in that direction, less and less people will be able to purchase. So we'll start hearing, things about like extended amortization schedules, so longer mortgages, like, 40 and 50 years. And they're probably going to reintroduce things like ARMs, where your mortgage is, locked in for a lower payment for a certain number of years, and then it will go up gradually. So we're going to start seeing some different programs down the line, because affordability is just really, really an issue right now. So, alrighty. So Ayeli said she submitted an offer last weekend for a $300,000 house, and the seller said they received offers at $400,000, and the comps are $300,000 in the area. So people are really overpaying. Unfortunately, that is just the case right now. It's not as aggressive as it was last year, and it was at the beginning of this year. But there are still people who are desperate to get houses, and this is exactly what I was talking about. People are willing to do whatever to get into a property, and I'm not advocating for that, guys. Buying a house is a long-term investment, and we do see some appreciation, but you never want to dramatically overpay for something that you will not recoup in the next 2 to 4 years, So just be aware of that. Carol asked, what's an amortization schedule? So it's the number of months in which you'll pay your house back in. Currently, right now, a standard 30-year mortgage is 360 months. Yes, I believe it's insane too. So, and I have is it Delicia Moya? Did I pronounce that correct? Can I get a thumbs up on that? Okay. The next question was, who denies or approves a loan? Is it the loan officer or the underwriter? So technically speaking, the only person who can deny a loan is an actual loan underwriter. So if you have been told that you don't approve, it won't be an actual loan denial unless you ask them to send it to underwriting. So a loan officer is a good indicator, their expertise should be a good indication on whether or not your loan will be approved in underwriting, which is why it's also called a pre-approval, and not necessarily a guarantee. Okay. So Carol asks that I heard that they were going to extend the 30-year mortgage. Well, that's some of the legislation that's on the table. And a lot of people are advocating for, more affordable lending products. And when we saw this happen the last time, that was some of the things that they did. I don't think that interest-only mortgages are going to be a thing, because banks want people to pay their principal down. But the last time we saw interest-only mortgages, we saw aggressive ARMs, and then we saw, 40 and 50-year mortgages. And so because I don't believe that we will go to the extreme of having people not pay any principal, and I think that a lot of people got burnt on 2-year and 3-year ARMs, I see it's more likely to have extended years. So that's just my 2 cents. Again, I'm not a psychic. We'll have to see what's happening, but I do pay attention to what's being discussed. And I know affordable housing is the #1 issue that we have in the real estate community right now. Okay. Ooh, you guys, my brother Rudy, the other hoe for $1, has signed in. He is the best. He said he might be biased, but my team is the best, and I'm as real as they get. Oh my God. He is my favorite human, also my best friend. So everyone give Rudy a shout out. Okay. So Carlos is saying, if I go from being an employee to self-employed, will it impact my approval for a loan? Um, if I switched, okay, so he asks two questions, and I do just want to make sure that I'm answering this appropriately. So one, if you are a W-2 employee and you go to being self-employed, if we do not have one complete year of tax returns in your new self-employment, we are not able to qualify you with that income, right? You may still be able to qualify if there's another borrower on the loan or if you get a cosigner, but it will be difficult for us to be able to use that income. So if you go from a W-2 job also to self-employment, right? The self-employment, we're going to want to see that it's within the same line of work or the same line of experience that you initially were working in, right? So like a good example of this is like, a nurse has been working in nursing for 20 years and then decides to open up her own like care group or her own care home, like group home. There we go. That's a good like segue from nursing to adult care homes, right? And so after a year of her doing that, she should be able to qualify. Now, if you are self-employed and then go to W-2 income in the same line of work, it's much easier and much quicker. You should be able to qualify with that type of income with an offer letter and a first paycheck stub. So, the second question he has, what if he switches jobs within the same industry? So I will tell you that if it's like for like, right? So if it's W-2'd and W-2'd, salary and salary, it shouldn't be an issue. If you are qualifying using additional income like overtime or bonuses or commission, it could be challenging to use that additional income without a longer period of time, on the job. At minimum 6 months, typically we'd like to see a year so we can get a good gauge on, the consistency of that. So I will tell you that not in all cases does that make sense. So if you are in the process of buying a home, my best suggestion is going to be don't change jobs during the process. Okay, so let's see. If I end up not being able to compete in this market, I'm going to throw some money in a Roth IRA. Still learning about that though. So here's one thing that I always tell people. A lot of people argue that, it makes absolutely no sense to rent. But if you are somebody who is outpriced of the market, right? So renting will be more affordable. And if you invest in your retirement, like max out your 401k, max out an IRA, and then invest into stocks, like S&P index fund, right? You will do well, right? It's not like you're letting your money not work for you. You will do well. And so I highly recommend this. And there's tons of really great channels for this too. There's a book called The Psychology of Money. And then there's Money by Tony Robbins. I would highly recommend that you start there and learn just about general investments. So, okay. Rajani says, is it hard to get loans with people or unemployment last year approved? So it depends, right? So if you've been back to work after a period of unemployment and you've been at your job for 6+ months, you shouldn't have a problem qualifying unless you have, again, like I said, variable income like commissions or overtime or bonus that we need to use. So it should be okay to qualify. Typically, we only care about gaps that are greater than 6 months. So you'll want to pay attention to that. Okay, let's see. How do I think Biden pushing back student loan payment date until January 31st, 2022 will affect the housing market and buyers? So, up until last year, student loans were actually the highest bill that most consumers had to pay. And I do think that it's giving people a lot more flexibility in their budgets to be able to consider buying a home. Unfortunately, we still have to qualify you with a payment. So the fact that they're deferred doesn't mean that your buying power is any bigger. A lot of loans still require us to use 0.5%, or 1% if nothing is available. And so unfortunately, like it doesn't help your purchasing power, but I do think that it's giving people more money to put towards down payment, more money to spend on housing, etc. So, okay. Do I know if Arizona rooms count as square footage on a home? That is a really great question, and also a really frustrating one, because there's lots of homes in Arizona that don't have permitted Arizona rooms. And so if it's just an enclosed patio, unfortunately, it is not square footage. So it has to be enclosed and permitted to be counted in the square footage and built in a workmanlike manner. So I hope that answers your question. Jen is saying that Tiffany says, can I have my agent ask the seller's agent if the appraisal comes in low, will the seller renegotiate before I waste anyone's time? I mean, so no. So there is that. I mean, they can definitely ask, but in this market, it is difficult for a seller to say absolutely, because it is so competitive and they might have 15 offers on your home. Now, it's a different story when you're already under contract and already in the process, right? People are a lot more flexible and more willing to negotiate, but when they're just getting offers on the table, it's doubtful in this market that you'll have somebody agree to that. So they mainly want a guarantee from you that you're going to pay if the appraisal doesn't come in. All right. So Rudy says, so I'm hoping this doesn't sound like a stupid question, but do you think it's better to pay for a remodel to finish the house that you've owned forever out of pocket, or pull the equity out of the house and pay over time? Well, it depends on like what you're doing with the money. So if the money isn't currently invested and you have a super low interest rate and you're only going to end up paying more, right? So, you know, some people have interest rates in the low to mid twos, and a cash out refinance now is going to be closer to the threes. You know, in the long haul, how much more will you be paying for that remodel? Now, if you're going to be taking money out of the stock market, if you're going to be taking money out of your 401k, right, then there's a penalty, one, in taxes, and then two, in, you know, the appreciation that those investments would have. So you have to really look at the opportunity cost. In that case, I might say it's way better to take out of your home loan, right? Especially because the home loan depreciates. So you really have to do a side-by-side comparison. You know me personally, we can go over this during the weekend, okay? All right. So let's see. I'm set to close on Friday, and my underwriter is requesting my college degree. Is this normal? You know what? Somebody else asked this question earlier, and I'm sorry I forgot to get to it. But yes, they can ask for, it's not really your college degree. They typically want to see your unofficial school transcript to verify that you had schooling in the line of work that you're now earning income on, or they're trying to complete your actual 2-year work history. So that's what an underwriter will request. If they are requesting your degree, they might just be wanting to confirm that you have experience in a line of work that maybe you haven't had history working on before. So if you were the person that asked that earlier, let me know if that answered your question. And then Kimmy, if that didn't answer your question, go ahead and put some more detail on here. Do I recommend paying off a CFD lien before closing, or pay it over time? So typically most liens have to be paid off when you close, unless you're on a payment plan. My general feeling on debt, guys, is that there's never a reason to pay interest on anything, truthfully. I mean, a mortgage is leveraged and the asset appreciates with the dollar and the loan depreciates. And so in that case, I'm a lot more favorable. But just so you know, I aggressively pay down my mortgage too. So whenever it comes to like liens, debts, anything that you're going to be paying penalties or interest on, I would say if you have the money, just pay it. All right. So what is a first-time homebuyer's typical DTI for a house and total debt? Feels like the first-time homebuyers are in a tough position in this market, even with 3% rates. So it really honestly depends. So the median household income right now is $79,900. Okay, which means that half of them make less and half of them make more. And so you can qualify with 45% debt to income ratio on your gross income. And, you know, typically, you know, if you're not like, that's somewhere between 28 and 35% of their actual net take home income. And usually that's an okay percentage for some people. For most people, if they don't have a lot of discretionary spending, you know, it is tough for first-time home buyers. Just bottom line, I've never seen a market like this. I bought my first home in 2006, and it was really honestly not as aggressive as this one. There were bidding wars, but people weren't paying $100,000 over a purchase price. I mean, that is just, I've only seen that in this market. So it is tough. One thing I will say about, millennials and this generation under them is that they're not quite as big of spenders, right? In my anecdotal experience. All right, so let's see. Corinne asks, how long do derogatory late payments stay on your credit? Is there a way to improve this during the 7 years? So this is a question I get asked often. So it has the most impact within the first 6 months of paying something late. And then as time goes on, it counts less and less. So your first year, it's the worst. After 2 years, it really doesn't have a ton of impact, especially if everything else is paid well. For example, when I was having my son 3 years ago, I paid my Nordstrom payment late. And yes, I'm attacking you, Nordstrom, because I was super pissed that you wouldn't take this off. I mean, I was pregnant on bed rest. I missed the payment. And I got a 30-day late, but I have not been late on anything else. I still have a credit score above 740. So I hope that helps with that question. But it does freaking suck. So Patrick, actually, my underwriter, who's super awesome, paying attention to this, said CFD liens are especially special assessments like taxes for infrastructure, most common in Buckeye and Verado. If the DTI is tight, it makes sense to negotiate. Okay, so I don't know. So a CFD, are you paying interest and penalties on that? To my knowledge, if it's a special assessment, I don't actually think that you pay any penalties or interest on that. So I still don't like a lot of extra debt just in general. And he's recommending that you negotiate it with the seller to have that paid. We do a lot of loans like that here in Buckeye and Verado. And typically we see that the seller has already paid it. So there is that, but it is a crazy seller's market. Okay. Yep. So no interest, supplemental property taxes paid separately. There we go. Awesome. Thanks, Patrick. Okay. So lots of questions from Nayeli. The base price of our new home is $563,000. After the land price and upgrades, the total came to $753,000. The base price for this home is now selling at $620,000. The appraisal came in at $754,000. How much do we have in escrow? I might be using the wrong word. How much? Well, I mean, I'm not sure I understand the question, but your home came in at your purchase price, which is good. And the fact that, the base prices have gone up, a significant amount just shows you that when those homes close, you will have a significant amount of equity. This is the one benefit of buying a new construction home. There's lots of benefits. The home is newer and everything, but this is one of my favorite benefits. Is just that you buy a house and it takes 10 months or longer to build your house. And in that time period, newer houses are being built. And as supply goes down on those lots, the values of those homes go, up and up and up. Now, the only case where this doesn't make sense is in a market like a buyer's market where the home values aren't going up as high and the upgrades are extensive. And in that case, it can take you a couple of years to recoup your actual upgrade costs. But in this market, what's awesome is that you basically close and walk into a house with equity. So there's that. Okay. So Carol says, do you think this housing market is related to the top people in politics, or is it tied to anything else? Nayeli, you were asking for equity. Yeah, you have $1,000 worth of equity at this moment. Okay. I don't know what the question is, Carol. The housing market, the way that it is right now, we were already headed in this direction. So we did not keep up building growth with population. So we knew that at some point we were going to have a shortage of houses. And then we had a crazy amount of people purchase at one time because interest rates got historically low. And then supply is constricted because our aging population can't vacate their houses. And so people are aging in place. So we aren't replacing inventory. people can't find a place to move, so they aren't upgrading their properties, and interest rates are historically low. So people that wouldn't have been able to purchase in a different market are now eligible to purchase. And so we have additional home buyers entering into this market. So that is what has happened, and it's gone on for a really long time. And I had an interesting conversation today with a good friend. And, my biggest fear is that if it keeps going on this way, I'm fearful that people just can't afford houses. So I'm just anxious to get that affordable lending information as soon as possible. And if I'm lucky enough to have anyone from any of the agencies watching this channel, like, it would be great to find out what's happening, because I really do feel like that's a huge crisis. But I don't think that we're going to see home values go down. And I don't think that anyone in politics is really responsible for this. I think that they did everything they could to prevent a catastrophe in the economy. And real estate, it feeds so many different industries. It feeds banking, it feeds realtors, it feeds loan officers, title companies, insurance companies, home improvement companies, contractors, landscapers, pool companies. I mean, there's a variety. So many different verticals are related to real estate. And so they just tried to keep it going. But I don't know what the solution is for this. And if you look at what's happening with bottlenecks in building, and the fact that they're saying it's going to take 5 years to get up to where the demand is now, that's a long time to wait, and I have no idea what's going to happen. So, well, there's that. I'm off my soapbox in case you guys want to ask more questions. Okay, so let's see here. All right, let's go back. You have to text message me. I've already lost your text. Okay, there we go. Okay. So what is a conditions list? So again, that's what we call the underwriter's list of additional documents that we need to insure your loan by any of the agencies. We call them conditions because if you don't meet the conditions, you don't get the loan. So that's what that's called. Okay. All right. So besides the 3 credit bureaus, what other sites do underwriters pull from? Ooh, this is such a good question, guys. So here's what we pull. And for those of you who are applying for government loans, this is for you. So we pull from the credit agencies. We also pull this thing called Data Verify. Other places call it a fraud guard. Some places call it a Nexus Lexis. But we're basically going to do a title search on you guys to find out if there's any liens, foreclosures, any kind of judgments that could be attached to your property after closing. So that is something that we run. Then if you're getting a government loan, we run a thing called CAVERS, which just investigates whether or not you have outstanding government debt that has been defaulted. And this is really huge, guys, because a lot of people dispute things off their credit, or they had an old student loan 20 years ago. Those things do not fall off, and you might get a pre-approval, but these things are run by underwriting. And so you'll find out that you owe money to the government in the process. So those are definite things that come up all the time. Now, I will say that judgments, if you have a very common name, those things come up pretty frequently. And if it isn't you, all we have to do is provide additional information like your date of birth or your social. So I wouldn't be too alarmed if something comes up and you've never heard of it before. But those are the additional things that we investigate when we're getting a home loan. And it's not really done in the pre-approval process. Okay. I'm going to answer one more of these questions, and then I'm going to answer your guys's, so keep posting them. I don't have a lot of money in my checking account. What do they want to see on my bank statements? So typically what we want to see on your bank statements is, one, that you do not have overdrafts, or that you don't have insufficient fund fees. Those are indications that you do not manage your money well. And so that's something that we're looking for additional reoccurring debts that maybe don't appear on your credit report. And then ideally, we'd like to see at least 1 to 2 months of additional mortgage payments in the bank that we call reserve payments. And we will have to source where you get your down payment funds. So it's down payment funds, it's reserves, it's payment history. Are there additional debts that we're not considering? And are you managing your money well? So that's what we actually check on bank statements. All right, so let's go here. After submitting all of my documents for a pre-approval, how long does it take to get the number of what I qualify for and when I can start looking? So generally speaking, I would say, anywhere between 24 to 72 hours. It depends on the workload of the loan officer. But there are cases that, people have to go talk to an underwriter, or they have to get a verification of employment, or they have to do additional research based on the credit history. And sometimes that can delay the process. I have a client today, who, has 16 different jobs. And unfortunately, it's like I have to make sure that I don't have a gap of 6 months, and I also have to make sure that I have a complete 2-year work history. So that's somebody I'm not going to be able to issue a pre-approval on until I get all of them. And it's 16 jobs, so I'm assuming 2 weeks. It's a long time, and it's a lot of work on our end to do that, but better to do that in the pre-approval process than when there's so much stress with the close of escrow. So I hope that answers your question. If it ever takes longer than 2 weeks and you haven't heard from a loan officer, that's not a good sign. So definitely reach out to your realtor, definitely reach out to them, maybe something happened. Okay. So Tiara Lewis said, do you think about the first time, the homebuyer 17,500 grant from Bank of America? So I don't know a ton about this. I know Kyle recorded a great video on it, and honestly, I'm sure it's amazing. So if you want more details on that, not to send you away from this channel, but he already recorded one. But a lot of banks, just so you guys know, have money like this, and it's called their community reinvestment grants. So if you call any large bank or credit union and ask them about their CRA funds for first-time homebuyers, right? They should tell you about any kind of grant that they have or specialized program with minimum down and lesser mortgage insurance. Make sure that you ask more than one person, just because not all people that work for a company are familiar with all of their loan products. So if the first person tells you that they don't have it, I would ask to speak to a manager, just because most federally chartered this kind of investment. All right. So let's see. Okay, so Nayeli says, it doesn't sound like what I was told. I thought it was the 620 minus the 563. I thought 57,000 in equity, so I'm confused. So here's the thing. So you're basing it for base price for base price, and that's not apples to apples, because people are going to put different upgrades on their purchase price than what you did, right? And so some people might upgrade it more than you did, and some people are going to upgrade it less, and those homes will have different values. So really it's the end value, it's what the appraisal gives you. And so that was $754,000 versus the $753,000 purchase price. Now, when those 620 houses complete construction, right, and they get their final sales price and their final appraised values, right, your home should have additional home equity, right? So they were probably trying to explain they did the same upgrades that you did when their homes closed, right? You would see an increase of approximately, 50 some thousand, right? But that's not a for sure. And you have to wait till those houses complete and finalize and you get their recorded sales price to get an idea of your equity. All right. So, okay. Sam says, I'm confused about closing costs and why I am, as the buyer, responsible for all of those fees. So I actually get asked this question a lot. And I have to be, to be really candid, it's your home purchase. Why wouldn't you pay for your closing costs? It's your home loan. I know that we were in a buyer's market for a really long time, especially because of the recession. And I think that it became really customary for the seller to cover all of the expenses. But that's because people weren't really wanting to buy real estate, and that was an incentive to get people to purchase. In this market, there are way many people who want to purchase, and the sellers have a lot to choose from. So it is not uncommon for you to pay for your buyer's agent. It's not uncommon for you to pay for all of your costs. In fact, I would say that that's probably more the norm these days than having your costs being paid for by someone else. All right. Can you get multiple grants? That answer is yes. So most grants are layerable, if that's a word. So typically you can get a grant from the bank that you're applying for, and you can apply an additional municipality grant or additional down payment assistance grant. So definitely most programs allow you to layer. All right. Thanks, Rick. Thanks for the good stream. Hey, guys, if you are finding this information useful, it would be super awesome if you gave me a thumbs up. That really helps with the rankings. And then definitely keep your questions coming. Okay. Wow, what's the most I've ever seen someone get? Probably in the 20,000s. Most grants are, somewhere between like $3,000 and $5,000. The Bank of America grant's already $17,000. So if you coupled that with a $5,000 grant, you're probably like 22,000, 25,000. All right. You know what's so funny? No one ever asks me about that NACA program. Not to knock on NACA, but I've never seen anyone get those funds. So if that's a program that you're looking up, I feel like it's an urban legend, kind of like the Yeti. They may or may not exist. Who knows? All right. So let's see here. How does an underwriter know that I opened a new credit account? Oh my God, guys, we monitor everything. So if we get a credit alert, we have to investigate it, and they literally monitor your credit up until the time we send the funds for your home loan, right? So people think that, okay, good, I got a clear to close. That means I can go ahead and, buy the refrigerator or finance the washer and dryer. No, please do not do that. We will find out your loan will get kicked all the way back to underwriting, and it's stressful to try to find out what those monthly payments are going to be when they haven't even hit your credit yet. So please don't do it. Also, don't quit your job. Even if we are clear to close, even if we verified it, we still verify it at funding. I cannot tell you the number of people who do this. It's so crazy, and they think we won't find out. 100% we will find out. All right, so there's that. Sorry to get off my soapbox. Those things really stress me out, though. Okay, can an underwriter increase your loan amount? The only person who can increase your loan amount is the loan officer after you have requested it. So we don't arbitrarily increase your loan amount. You dictate your loan terms, your down payment, aside from the minimum requirements. But if you want to apply for more of a home loan, that would be something that you would communicate to your loan officer, and they would verify if you qualify or not. But an underwriter does not dictate your loan terms. Now, if you submit to apply for a specific program and you don't qualify, they can counter offer the approval for a different program, but they cannot change your loan terms. So there's that. Angel asks, is there any way I can lock in an interest rate before I buy a property? Nope. Also a common question that we get asked. Unfortunately, locks they stay constant with a property address. So unfortunately, once you're under contract, we lock in your loan. And if you cancel that, it doesn't go towards the next property, and you can't lock in ahead of time. Locks also only stay good for a certain time period. Typically that's 30, 45, or 60 days. And the longer you lock out a loan, the more it costs you. So generally speaking, you don't necessarily want really long-term locks anyway. Okay. And then let's see here. Do I start the underwriting process before I put an offer on a home or once my offer is accepted? So, back in the day when things weren't as, aggressive, I would say that a lot of lenders submitted your loan right after, you got pre-approved, and it was just what we call a TBD approval. In this market, because there is a high volume of refinances and purchases, I've seen that less and less. I definitely do this when somebody's loan is really complicated, because I just want to make sure that we're getting ahead of any conditions or that I'm ahead of any potential problems. But for the most part, you typically start your underwriting process after your contract has been accepted, after you sign loan disclosures and provided updated financial documents. Alrighty, guys, we're getting close to the hour. So if you have last minute questions, definitely let me know. Thank you for those of you who, participated in the poll. I'm glad that this information is helpful. Also, I'm doing a giveaway for $100 for the best video ideas. So if you have a good video idea, post them here because I definitely want to create a bunch of new content, and I'm definitely feeling burnt. Right? So one of the things that I was suggested was for me to do, review a budget and show people what they could get rid of to maximize their purchasing power. I'm definitely going to do a video explaining, the differences between a broker and a banking lender's, closing cost estimate. I think that's important. But yeah, definitely send me your video ideas. Okay, so Victor is saying, hi, Lizzie. How are cash out refinances looking right now? Are rates on a primary cash out or are low on a primary cash out, or have they creeped up over 4%? Excuse me, guys. I just burped. I'm sucking in too much air from this live. So honestly, interest rates, I would still say, are in the threes. It really depends on your loan to value and your credit score. So the lower the credit score, the higher the hit for the cash out. And then also loan to value is really impacted by that. So anything under 75% has the lowest hits for that. So you should still be able to get a fairly, low 3% interest rate if you have good credit and good loan to value. All right. So Delicia says, how do you get grants? Guys, you can look up municipality grants. So basically if you put like home buyer grants Phoenix, right, you should be able to see like all of the municipality grants for all the different cities, how much they're offering. And then you can also go to all of the different banks and ask them what their grant programs look like. In Phoenix, I know like the city of Phoenix has grants. There's an IDA WISH program. Federal Loan of San Francisco has a bunch of grants. I'm trying to think of who else has grants. US Bank has a grant. Compass Bank, I know, has a grant. So I hope that's helpful. Can I do a video on construction loans? Okay, let me see. Since I'm about 3.5 weeks to closing, is it safe to buy that fridge, washer? Okay, no. So honestly, I will tell you that do not buy appliances until you have gotten your clear to close. And then in that case, you can buy them only with cash. And if you're planning on financing anything, it's after close 100%. And you never want to dip into your down payment funds, guys. Please do not dip into your down payment funds. It's the worst. All right, so let's see. Oh, Steven, yeah, where were you, man? It's already like 7. Oh, thank you, Lorena. Thank you for this. I appreciate it. First time to do cash out refinance, sign closing documents, August 7th. She said disbursement of funds would be on the 12th and expected to receive the money on the 13th. So just so you guys know, August 7th was a Saturday. So what happens is you have a 3-day right of rescission. So that's Monday, Tuesday, and Wednesday. And then you can back out, hypothetically. And so once that's done, they fund on the following day, which is Thursday. And the title company, it may take them all day to receive those funds. And they have to send you out a fund, like a wire, which is why it's even the next day, right? So typically, like if you're signing on a Monday and you fund on Friday, you won't get the funds until the following Monday. That's the reason why. That's how that timeline works. Okay. We pay child support by court order. It's never popped up on our credit. Will the child support affect our debt to income ratio? Yes, because it'll be on your bank statements or it'll be on your paycheck stubs. And it is a question that you have to disclose on your loan application. So it will impact your debt to income ratio. So nope, mystery underwriter was not Kyle. It was an actual underwriter who will be here next week, guys. So please tune in for that. His name's Tom. He would really love a boost of confidence. Thank you guys for the support on the solo live stream. Let me tell you, they are really stressful for me. So I'm glad that you guys are seeing value in this. So I appreciate it. Again, same 18 people. You guys are rad. Is there anyone you guys want me to bring on the channel? I'm pretty sure we can get Kyle on, but if there's anyone else you guys want us to bring on the channel, let me know and I will shoot them off an invite. So awesome, guys. All right, well, we are just about time, so I just want to say thank you guys. If you haven't already liked this live, go ahead and do so. And if you haven't subscribed to the channel, it would mean the world to me if you did. Okay, guys, so until next time, we'll see you next week.